Good morning, everyone. I'm not sure if you can hear me or not. I'm in Florida, not in New York, and being a technological wizard, I can't tell which mic is hooked to what and if things are working. So if you can hear me over there somewhere in Twitter or YouTube land, let me know. And if you can't, I suppose I'll be getting the messages, "Hey, we can't hear you." I don't see any of that one way or the other. Can you hear me, Hambre?
Doc, I can hear you just fine.
Okay. Okay.
I- if you go into, just so you know, on StreamYard, if you go down to where the mic is and then there's a camera, right
Right.
next to the mic, there's an arrow and you can pick which microphone to use.
Right. Okay. Then I just have to know which one is which. But okay.
Okay.
Yeah. Okay. Good. All right. Yes, you hear me. Okay. Crisis averted. Okay. So, just a real quick overview. Anybody watching this is in the weeds enough to know that we hit new all-time highs on Friday again, and that we had the big quarterly September options expiration. Of course, the clickbaiters told you there's $3 trillion worth expiring, whatever. Well, yeah, that's maybe notional value, but so much stuff is out of the money, in the money already hedged, whatever. That doesn't really matter. Um, what matters is what's local, what's near where spot is or was, and we were compressed in that positive gamma zone, um, with overhead calls, which we'll look at in a minute to see what's still there, that kind of dragged us up. Okay, so typically going into a big after a big options expiration, we have a lot of gamma expiring. But when I looked at, if we just take a quick look at the at options depth, yes, there's not a lot here. 2,000 contracts, 6670. That's the call side. So that would kind of be where we would stall. So people sold stuff at the high on Friday. We have 6625 at the bottom. So here's a pretty clear defined chop zone. And in the middle, it's thin. I don't know if you can see the numbers in the middle here. This is 65.60 to 65.35 is your free to move around the cabin zone. And that's kind of what we expect. But getting back to the overall gamma landscape, there's still a fair amount here. The dark blue is chunky positive gamma, so to speak. And so above and below, we're pretty well supported. Now we have the JP Morgan collar at 65.05 at the end of the month. So long story short, the landscape doesn't seem to have changed that much. This is not much different than what we saw a week ago on a daily heat map. It just kind of looks like things are the same. Volatility sellers like me keep coming in and selling the edges, whatever they sell, and it looks like we're going to just kind of be broadly supported in that going forward. At least, until the picture changes. Don't torture the data. That's the picture. Uh, Now this, I don't have my regular stuff here on this. I don't know how to find the screen that I'm looking for on this trading view. Trading view is opaque to me as everything else. I just mechanically know that if I click here, something shows up, and I leave it open forever so I don't lose it. Yeah, I know it's not very impressive. And so I don't know how to find the volatility dashboard that I usually use, but I can just kind of walk us through what, maybe I'll have it prepared by tomorrow. I'll just kind of walk us through what I'm looking at. And we'll start with VIX. Okay, so VIX popped up to 16, and VIX between 16 and 18 on the option chain for October. It's kind of thin, but there are some calls at 16, so kind of that's a sticky inflection point, and there is a path to 18 if things would get a little spicy. Here you just kind of broadly see the zones. VVIX, and this doesn't update, I don't think, intraday before the open. At least I'm not sure if it does. It seems to kind of stay stuck. VVIX, about the demand for volatility, is also kind of in a normal range. A VIX of 16, 1% move is pretty vanilla standard. A VVIX under 195 is pretty standard. I like to look at the VVIX-VIX ratio, and it's around 6 and change, and that's kind of normal. When it gets a little lower, depending on which value gets higher or lower, but without getting into the nuances, when it gets a little lower, it typically means we're kind of pretty hedged, maybe a little cautious. When it gets around 6.5 or near 7, it means we're like party on Garth mode, and that might be time to exercise some caution. And the difference between the VIX and the VIX futures is around 2, which is pretty healthy. So typically, well, one is going to come to meet the other. If you look at the VIX 2, the next month, the difference is even bigger. So we have a pretty steep contango, pretty chunky. VIX options out into October, November are kind of expensive, and so that's my quick take on VIX for this, which is really, we're really not going to talk about all that stuff at depth. Okay, so here's what we have for today. Now let's go to depth view. Which is, I'm looking at market makers view. And so this shows us how many contracts market makers are long or short. And we know that when market makers are long contracts, that depending on the direction of travel, so let's just say we're coming from below to above, it's suppressive. Market makers sell on the way up, but then they buy when we move away from it. So that's where you get that sticky, quote unquote, price action. And the same thing happens from below. As we're going down, market makers are going to be buying. As we're going down to this 63.65, 63.30 area, which incidentally was where we bottomed out in the overnight section, market makers are going to buy. And as we go back, then as we move away, they're going to sell. And we end up right in the center, which is where we ended up. Just look at the colors. I don't know how well you could see. Let's see if I make this larger. Maybe you can see the numbers a little better here. So below 65.20, which is here where I am, is green. You see the red. So below 65.20, as of right now, there's not a lot to stop us down towards 66.10, 6600 round number. There's really nothing there. And The next really big target would be 65.80, and that's really far away. The expected move today is 23-ish, 25-ish. And so from where we are now if we go back to here, if we go back to SPX, so from where we are now, call it 25, give or take. That puts us right at the bottom of where that, so 66.25 is down here. And here, this orange is, my subscribers get this. This is something that I write up, and it's not mathematically driven. It's after I come up with my plan. These are levels that would be the equivalent to the horizontal lines you would put in manually on your chart. They're not calculations. There's manual lines based on my analysis. And 66.50 is a pivot. If we get over 66.50, there's a path up to 60 and, retest the all-time high. And if we stay below 66.50, kind of the range that we've been trading in overnight, and I expect it to be kind of a choppy day. I don't really expect much, not much of anything coming from today. Let's go back to the dashboard and kind of look at it again now that I blew it up, and you can maybe see it a little better. And I'll repeat what I said before. So here's that 66.45, kind of where we are. Just trust your eyes. The path between here and down here, the lines are kind of horizontally don't go out that far. So we're free to move this way before we get to the bottom of the chop zone and get a bounce based on what we see now. Same thing up on top. It's kind of going to be a little harder to fight through this. So the default is it'll be hard to fight through this. But if we're above 50, 55, then we get that kind of mean reverting grind upwards, especially if it's later in the day. Now, next thing we have to keep in mind. Over these last few months, really, we've been noticing and been tagging it in the server, the intraday flow has been setting the edges. And I've mentioned it, many times. The intraday flow has been setting the edges. And what do I mean by that is by 9:45 to 10 o'clock, we typically see 5,000, 7,000 contracts of an iron condor, usually 5 wide to start, sometimes 10 wide. And usually they come in around the 10-15 delta. So they'll be coming in probably around, let me pull up the chain and see. Now you can see that. Okay, so they'll look at that. See how fancy I am? They'll be coming in. We don't want to see this. We want to see this. I haven't officially, so to speak, kept track of what delta they sell. But they typically, so I'm going to guess they're going to sell. Let me see. What do you like to get? They're probably going to sell right below 6,600 in there, 6,600, and that's going to set the edges. And so we're going to have positive gamma below us down here probably, and when it does hit the tape, I'll in my server we'll talk about it and we update the levels. If anything significant changes, usually it just sort of, like I said, sets the edges and we know where we're going to get supporting flow from. We also sometimes see large trade, 1,000, calls or call debit spreads coming in, and that kind of tells us that we're heading up, or put people come in and it kind of tells us that we're coming down, and those are good for intraday scalps. But the landscape hasn't really changed a lot. There hasn't been a lot of change in the landscape. Getting back to here, I just want to see what's above us in terms of where customers are long. And we see some 66.80, some near the money stuff here. What date is this? Okay, for the 30th. Okay, so there's some long calls for the 30th. Right now, above us, there's stuff all the way up at 68.25. That doesn't matter. And as you look at the screen, just look at the colors, you see green. Green is good. Got some sold calls here at 67.60 at the money for Friday. No, that's for next week. But we're broadly supported. I mean, we're supported. That's all. I actually was kind of, I don't know if hoping is the right word, expecting to see some bear porn here somewhere. But I just didn't. You don't see me in YouTube. That's weird. It shows that I'm on YouTube. I don't know what. Let me see something. YouTube, you are live. It says I'm live on YouTube. Maybe that was before. Can you guys see me on YouTube? Well,
You're on YouTube, Doc. I just checked.
Okay. All right. So that must have been before I got it together. And so the only other thing we can talk about in terms of like the broad landscape is we have the PCE on Friday, Fed's preferred measure of inflation. So, is there enough to shift the narrative? I kind of doubt it. We did have CPI on Tuesday or Wednesday, I think it was, and in my weekend note, I wrote like Saturday morning, I had that mentioned as a possible inflection point. But I think it was yesterday, the BLS, the Bureau of Labor Statistics, where Trump fired the person who put out the unemployment numbers, they pulled the CPI report. I had kind of thought that the market might get a little bit upset about that. But if they're not upset, neither am I. We have Fed heads on parade this week, as is typical of after the FOMC. The Fed heads go out and kind of, do their speeches, go on tour and stay in nice hotels. And again, unless there's some real new narrative shift or whatever, broadly, I expect things to be the same. Now, we often see the algo wiggles if somebody says something and catches a key word or phrase. We go up 5 or 10 points or down 10 points, based on nonsense. And then if, as we're going up or down, we violate a key gamma level, that we can get some continuation until the ship gets righted again. But I'm not expecting, not that I know your crystal ball is as good as mine, not that I'm expecting anything dramatic from that, but it's always good for wiggles. The reason I'm pointing it out is not so much that I'm expecting anything substantive to come out of it, is that if you're in a trade and you get those wiggles, you might want to see if the wiggles are algo wiggles based on some Fed comment, or some interpretation of a Fed comment. I'm going to pull ES up, and turn the mic over.
Hey, good morning, everybody. So right here, as I'm looking at ES, I'm starting to see some weakness play out into today. But if we can hold above 67.05, I'm going to start looking for upside, and then potentially take it to 67.15. So about a 10-point push above 67.05. If we continue to stay below 6,700, I'm going to be targeting 66.90. And that's kind of the range I'm going to be playing today. I don't really see a big movement
So
above
you're
or
looking
below.
for 10-point scalps here and there.
Yeah. If for whatever, I always like to give the extreme. If for whatever reason we can hold below 66.90, I can see a drop down to 66.75. Which would feel substantial, I'd say. But unless that happens, I'm kind of playing this range.
I'm just updating this to see if I can get some gamma levels. So right now, the difference between ES and SPX is what, about 50 points, give or take?
Yeah. About 60 points, I'd say.
That's still 60. Okay.
Yeah.
Let me see what E-mini is. Is that okay? It's at 6702.
Yeah.
SPX equivalent is. Are we still hanging around 40? Yeah, about 40, right? So your level of 6705, whatever, basically corresponds to that 6650 inflection point.
Yes. Yes.
And the stall to the upside, just from a gamma point of view, looks a little stronger, so to speak, than the support to the downside. Not that we have to go down, and not that it won't change when locally, like I always like to say, if people come in, there's only like 250 contracts here. There's only whatever 750 contracts here at 6660. So a couple of big funds or algos come in and buy this stuff up, then the path upside opens. But as of now, the path to the downside probably has a little higher probability, which kind of corresponds to what you were saying.
Yeah. No, if we unclench, I think it could be fun, but I think that's a big if today.
Yeah, I
It's
agree.
not a big catalyst.
Yeah. And that's really it. Do we have any 59 points? Okay, thanks, Sherman. Go to 59 points.
I think uh I think today is going to make for some really boring trading, which is
Not if
where
you
I
not
really
if you sell
strive.
not if you sell iron condos.
Well, I meant in like a
For
very
normal
easy,
people.
yeah, very simple kind of range chop, with with a big enough range to make some money. So
Right, exactly, right. I always liked, even when I used to like be more of a scalper than a premium seller, and I always did both, but when I was like more focused on scalping, I always liked trading within a channel than trading a breakout or a breakdown.
well, I think it's easier to see where price is going to go over the next 5 minutes than over the
Exactly,
next
exactly,
6 hours, right?
exactly. When it's a breakout, I figure I'm paying above list price, or it's a breakdown, then it's either the bargain hunter in me wants to buy a bargain, but I know how we drop, how we drop like an elevator. So I just want to, just get out of the way and not buy puts and just kind of wait for things to settle out. Okay, let's take a look at some trade related setups. I always like to do this. And on the broken clock, gets right once a day. This is really my small account. Usually I'm up 100, 200 bucks here or down on the SPX. I guess do a couple demo trades here. But for some reason, however the trades I just kind of set up here every morning. I do them here every morning live. Or at the end of the day, uh, they seem to be doing okay, and they're moving around a lot. So let's see what I would do today. Today, right here, right now. And I know we have some people that like to sell 5 wide. So I'm going to start with the 5 wide crowd. And let's go below round number 6,500 for starters. 20 cents. You could do 20 cents. You can maybe try to get a quarter. You might take some heat if we go down, but I'm going to put this in for me. I'll put one in at a quarter. See if it fills. And up top, 80 is a little close and spicy. I'd like to go here. If I can get something, I'd like to go to 85. But there's no juice there. So I guess 80 it is. I'll try and get a quarter for that. And if I put it in as an IC, put them both in together. So I'll do one as individuals and one as IC, 40 cents. I'll put one in like that just to get the party started. Okay, now as far as I like to sell wider, as most of you know. I still like the same 95 strike. Gets me way out of the way of trouble. If I do a 15 wide, 45 cents, that's decent. And on top, the same story. I do a 15 wide up here. $35, that's not decent. I want at least 45. Let's see what happens. And that's basically the setup. Now, as far as possible pins, let's take a look at that. I mean, 50 is sort of a logical pin. And that's a wide fly in here, maybe 30. Well, you want to sell where it's not going, so you don't really want to be selling the 45. But I have a feeling we end up there, so I'm going to go against that conventional wisdom. Report me to the options police for not doing what you're supposed to do. And let's see, call butterfly long. Let's see what we got here. Well, that one we'll do on the first side. On the call side, let's just say we get a little traction. $1.75 is a tad expensive for now. But a 5 wide is a placeholder for 50 cents. I don't mind losing the 50 cents. So I'm fine putting that in and I can build around it. And I was having a chat with a community member, whatever you want to call it, subscriber. Hold on, something is screwy here. About flies. And I was saying that really flies are pretty forgiving. What do I mean by that? If you do a 5 or 10 wide fly, even if it moves against you, you might be down 10%. If you spend $100, you might be 75. often you'll be a little green even if it goes against you, just by the way the volatility kind of changes. Because you're selling volatility, you're selling expected move, and so I think the on weakness play is sort of the probably going to be the better $1.15. I might want to do that. 75 cents, that looks good. I can build around that. Okay. Those are the two flies I'm putting in at the beginning of the day that I may close out for a 5 cent, 10 cent loss, 10 cent win. I might hold them. I might rebuild them. This is just sort of, this is what I do in real life for myself. And this is just sort of, hopefully some of you people on Twitter or YouTube or my subscribers get some benefit from this. And I think the benefit, I hope, is thinking of the logic that goes into it. We should stall here. So we want to sell that. 45 is where the move should happen if it does, but we're kind of thin there. So buy that, sell, buy around here, sell around here, buy below it. So the put fly just fits the structure better. Now, if we have a breakdown of 25, 15, 60, so something like this, but I just don't see that in the cards, so it's not really, not really a good play. Now, if we start to see weakness and we smell that, which is exceeding the expected move, then that might be a good fly to keep in mind and maybe move it up 5 or 10 points. Any questions, comments, or anything? Let me get this back down to the size it's supposed to be. And one last look, and then I'll sign out. Let's look at this dashboard here so we just kind of get the overall picture. So this is the same thing, market maker exposure, but I have the calls and puts separated. So you can see exactly what's there. Just for fun, because not everybody thinks market maker side of the table. Let's flip the script for a minute and let's see what customers, people are doing. So to the left is sell. Let's forget the numbers for a second. It's basically sold options all across the board. You got some long calls up here in the sky at 6,700, but you have some sold puts up there. Have a little bit of long call action right here at 675 makes sense. The one over the all-time high, the next strike up. You have all this selling locally above us. People aren't buying it. You have selling below us, not as much, but 66.25, like I said, is that level. And that's sold calls, but that doesn't matter. The hedging is still the same. Below 25, things get a little thin. And so now, if we kind of, let's just zoom it in a little bit. And we'll look at that. We'll look at charm, and we'll kind of call it a wrap. Okay, so blue is supportive. Yellow is kind of path of least resistance. So we could end up here on top 75.70, on the bottom 66.40, 66.20 in this zone, kind of supported down here where I showed you. Let me reset it again. Hold on. I chopped it off a little tighter than I meant to. Let's give it a little broader view here. If below, so if we get some weakness here below 30, there's a natural drift down toward this dead zone. Again, I don't think that happens down to 65.80, but that's kind of the tendency. The tendency would be for us to close 66.30 to 47.5, and here's charm. Now here's the decay at the end of the day when it kicks in. If we're below the 66.40.50, it's suppressive. Same thing here with the 66.70 area. Here's your free to move around the cabin zone, 45 to 70-ish on top. At the bottom, we can kind of get locked in here in this 30 to 40 zone, and we have to see how things progress from here. Oh, thank you. I'm going to make sure everybody sees that. I'm going to make sure everybody sees that. Says, thank you, Doc. You're the best. I appreciate that. So anyway, that's kind of what I see. I was expecting something a little spicier maybe with options exploration, but we just didn't get it. So don't torture the data. Once again, you see, and if the bulls get excited about something, or just, scalping. It doesn't have to be any like big hen line. If there's a little scalping or whatever, then 75 and 6,700, why not? Not today maybe, but I'm kind of willing to say 6,700 is when, not if.
Doc, if you won't say it, I will.
Okay, go ahead, say
it. I like 6,700 as a weekly target.
Yeah. That makes sense. And the weekly expected move, and I don't have my expected move thing on this computer. I have it on the other one. But again, pretty simple to see. You want to see the expected move. It's not like I have state secrets. The expected move is right here. 69.84, call it 70. 70, 75, whatever. Let's not quibble for a few points. So 75 from 50 was where we are. Again, we're not quibbling. So 66.50 plus 25, expected move, 67.25-ish on top. Expected move 50, which makes us 50, 65, 75-ish on the bottom. Now, if you want to see the expected move-ish, you could just look at your deltas and find around the 20 delta. Oh, look at that, 75. There it is. Now, if you want to just have fun, this might be fun. I'm not going to sell the 20 delta, but what is I like to be away from the round numbers. You all know me. Sell that on the bottom, just 5 wide, just to mess around. I expected move on top. I'll go a little further. I'm not trying to squeeze the most premium out of them. I'm just trying to go home safe. Do something like that, but really something more aggressive and probably okay might be something like, I'm not doing it now, but I'll let you all know if I do it. That's not bad, 75 cents over there. And I might just tempt myself to do this. A third the width of the spread. I like a third to a quarter the width of the spread, I'm going to tell you. I'm going to put this one in for science. 65, 70, 65 on the bottom. 67, 15, 20 on top, roughly 14 delta on top and a 18 delta on bottom. That's a little aggressive. Could move it down one. Something like that. 65. That's not bad for $1.30. I think I'm going to cancel this one. I'll do this one, $1.35. That's fine. Yeah. 65 on bottom. 15 on top. 17 delta is still a tad aggressive, but I think that's okay, and I don't hold them till they expire anyway. Okay, now I'm really done. I was lying before and I said I was done. And I'm going to sign off and trade safe. See you in the trading room. You guys know me. I'll be on tweeting stuff out on Twitter randomly here or there. And that's it. Now if I can figure out where the sign out thing is here. Okay, end stream. All right.
Good luck, everybody.
Can you do the same for NQ futures? I can do something like that next time. I don't have quite the granular data for NQ that I have for SPX, but I'll give it my best shot, and we'll do that, next time.